Hey, what's up, guys? Another episode of Payout of the Week here with your boy Mayne. Each and every week, we're going to be breaking down a trade from some of the top traders at Breakout. We're going to reverse engineer their trade idea and see if we can glean any insights that might help you by learning from some of these traders who are pulling out tens of thousands of dollars from the firm every single month. We've got a great one this week. Vitality is Life was number 11 on the November leaderboard, and the three consecutive trades that they took here were a large part of that reason. Let's hop into it, see what we can learn. All right, so I'm over here on the Breakout terminal. Now, this trader took 3 longs on Ethereum and totaled just under $22,000 in profit, and their total notional position size cumulatively was $845,000. You might be asking, how the heck did they open a position that big? Well, with our new $200,000 accounts plus 5x leverage, you can open up to $1 million notional position on Bitcoin and ETH. So they were taking full advantage of that. Now, this was a low time frame series of trades, so we're going to zoom into the low time frame, but I wanted to start on the H4 first because, to be very clear here, we are in a downtrend. At least we were when these trades were taken. You can see them right here, taken on the 18th of November. We are very clearly in a downtrend, okay? Lower highs and lower lows, but this trader is taking a counter trend long. Nothing wrong with that. You're allowed to do this. As price is going down, there is going to be bounces on the way down. It's not going to be down in a straight line. So each of these bounces into what ends up being a lower high is tradable. That being said, you have to realize the prevailing trend is down. So you're trading counter trend. You got to be really quick with your take profits. And you're going to see this trader did exactly that. So we're in a downtrend on the H4. Just want to make that very clear. All right. So now we've zoomed into the hourly here, and we're going to zoom in and focus on this area of price. Now you can see here, these longs were taken quite dangerously close to the lower high that ultimately trades significantly lower. Doesn't mean you can't take these counter trend trades. Again, right? They're just higher risk, lower probability. So what do I see here? I'm interested in longing Ethereum. I'm going to be looking for, obviously, this higher low to form. Even if I'm expecting price to continue to trade lower, I can look for where is this low going to form that will eventually lead to a lower high. And then I also want to know, where would that lower high potentially form so I can get out of the trade and I don't end up round tripping. So as price makes a fresh low here, you can see that it starts to put in some bottoming price action here. We have a very clear SFP on the hourly, and we have what I would consider bottoming structure in that price starts going sideways, so it's no longer just trending straight down. And then it also breaks higher on the H1 here. So whether or not this is a full-on reversal, right, and then this is ultimately going to trade much higher, maybe that's what they thought this was going to do, there is enough here to say, hey, we're probably going to bounce based on the H1, keeping in mind that we're in a daily 12-hour, 4-hour downtrend. Now, because that prevailing trend is to the downside, we also likely want to know, okay, if this is just going to be a bounce into a lower high, where is that lower high most likely to form, right? Remember, the H4 is still in a downtrend here. Well, I would argue that the order block here on the H4, you can even go out to the daily here. This is the area of resistance. This is likely where the lower high is going to form, somewhere in here. And you could refine this down to maybe the H4 order block right there and say, okay, so even if this is just a bounce, I have enough reasoning here on the hourly to formulate a long trade. We had a liquidity grab on the downside here, and I have a clear target for price to make a lower high. Even if it's going to continue down, this is still a tradable leg. Remember, price moves from internal liquidity to external. So in a downtrend, right, generally what's going to happen is we're going to take out external liquidity, create a new swing low. We now have a bearish order block. So this is your external liquidity, right? And this is your internal liquidity. And once it takes out external, it's going to get back to that bearish order block, internal, mitigate that. And then where's it going to target again? External lick. Again, I have an entire video of this about this on YouTube if you're interested in the education section on my channel, Trader Mayne on YouTube there. But we have enough here to frame a trade idea. We took out external liquidity. We have an internal liquidity target here. And again, liquidity taken out, this becomes our internal range liquidity that we can target. And even if this was going to go higher, this is a good area to TP because the prevailing trend is down. So that's what we're going to look for here. We zoom in to now even the lower time frames, knowing that yes, the H4 is bearish and all the time frames higher, but the H1 is bullish, meaning the M5 is likely bullish, and we have that entire framework to target that trade. So the last thing I want to mark out on the hourly here is, well, we have this breaker block, right? This is the up candle before the down move that took out this liquidity and gave us this sweep, which we've now broken above. So a retest of this is a long, right? So there's enough here on the H1 that this is bullish, which means the M5 is likely going to be bullish. And we can ride this up until we believe it's going to flip bearish again and get back in sync with that high time frame trend. So we have all of our high time frame levels, and now we're looking at our low time frame, the execution time frame. So again, this is someone else's trade. I'm just saying, what do I see here? Well, we know that this H1 breaker here is an area where we could be looking for longs to form. Well, what do we see here? I see a sweep. I see an M5 break and retest. I see a break in market structure here. So to me, that looks like what they formed this entry on was saying, hey, we're in the H1 bullish order block here, bullish breaker, and then they're going to go ahead and take this M5 trade. Maybe they took it based on this order block. Maybe they took it based on this breaker here, and they put their stop below this low time frame sweep. Why did this low time frame sweep give such a big reaction here? Well, that's because it's within the H1 breaker block, which caused that H1 liquidity grab. It's all lined up. Where are they targeting? They're targeting right up into where that lower high is likely to form on the H4. So that's entry one out of the way. That one is the clearest to me for the setup. This is like a big move that they're able to capture here. 4% to the upside, but they took two more trades. And to me, these were very aggressive, basically compound longs. So this second entry that they took here, to me, looks like it was pretty sketchy. They basically entered expecting price just to continue to rip, and it immediately pulled back and almost stopped them out. The only logic I can see here for the stop loss placement, I can't go back on the M1, unfortunately, this far, but it's perhaps below this 5-minute fair value gap. It actually lines up perfectly with this fair value gap. So it's just that space between this candle's high and this candle's low. That's your fair value gap here. And it looks like that's what they used to justify the stop of this trade, but also for the second entry, or for the third entry, I guess, on their third trade. And then they ended up TPing all three of their trades right as price came up into resistance, tagged that H4 bearish order block, and then started pulling back a bit. So overall, this was a great set of trades in my opinion, and it's a perfect example. These ones a little bit sketchier, but this one for sure makes perfect sense in my book for taking a counter trend long. So just because the high time frames are in a downtrend, there was enough evidence here for this trader that this was a low on the H1, and they could trade this bullish leg based on the H1 being bullish and the low time frame being bullish. And then they used that analysis to say, okay, I know that the H1 is bullish at this big box here. I'm going to look for a setup here, and I'm going to target where the lower high would form. $800,000 position size, $20,000 plus in profits, all in the matter of a few hours, by the way. You got to remember, this is just within one trading day, and they have the ability to withdraw that instantly 24/7 on demand, as you guys know. So vitality is life. Congrats on the awesome trade. I think this one was good for learning something for everyone about taking counter trend trades. That's all I got in this one, guys. We'll be back next week with another payout of the week. We'll see what we can learn then. I'll talk to you later. See ya.